Roughly $81 per ounce is now the forward target being circulated by JPMorgan. That projection is colliding directly with a spot price hovering near $70 after a rapid multi-day surge. Price did not climb gradually. It jumped nearly $6 in under 72 hours, which historically signals urgency rather than stability. When silver makes a move of more than 8% in less than 4 days, it often means buyers are reacting late instead of positioning early. In this video, I will show you how this sudden move towards 70 is actually revealing stress inside the trend. Then I will break down how current chart levels are signaling risk despite bullish headlines. And stick with me until the end, because I am going to explain to you how to identify whether this is continuation or the final stretch before a pullback. Over the last 3 days, silver moved from approximately $64 to $70. And that type of expansion matters because it pushed price well above its short-term baseline. The 20-period moving average on the 4-hour chart is sitting near $66, meaning price is stretched about $4 above where it normally trades. When that gap exceeds $3.50, silver has historically pulled back or paused within the next 48 to 96 hours in 7 out of the last 9 occurrences. I need to pause for a brief moment. If you're benefiting from this information and want to stay ahead of this before everyone else catches on, hit subscribe. I expose signals in silver before they go mainstream. Now focus on what is happening at resistance. Price tested the $70 level twice within a 6-hour window and failed both times, leaving long upper shadows on the candles. That tells you sellers are stepping in right as price reaches that round number. At the same time, the relative strength index is reading 73, which places silver in a zone where upward moves typically slow down. The last 3 times RSI moved above 70 on this time frame, silver dropped between $4 and $6 within the next few days. Looking deeper, there is a tightening structure forming between $66 support and $70 resistance, creating a $4 range. When silver compresses into a narrow range after a sharp rise, the next move tends to be aggressive. The key signal is where price breaks. If silver falls below 68.20, it opens the door for a move back towards 65, which aligns with the lower trend support. On the other hand, if buyers can push price above 70.50 and hold it, the next level to watch becomes 73. What makes this situation critical is the behavior of buyers entering now. Data shows that roughly 64% of recent orders are being executed at rising prices, meaning people are chasing upward movement instead of waiting for dips. Earlier in the move, between $60 and $63, buying was slower and more controlled, which typically builds stronger support. This shift in behavior suggests that many are reacting to price rather than anticipating it. The larger message behind JPMorgan's $81 target is not just about upside, it's about timing. Price can still reach higher levels, but the path is rarely straight. When silver stretches this far above its average and meets resistance at a major level like $70, the probability of a pullback increases. Right now, the data shows a market that has already made a significant move, with new buyers stepping in at elevated levels and clear resistance preventing immediate continuation.